Welcome everybody, Doug McKay, Anti-Wall Street Guy on the 10th of June 2011. Looking at a daily chart of the S&P 500, closed down 18 today at 1271. Pretty near the lows for the day. Obviously this is our 6th week down in a row. It's also the 6th video in a row where we've called the trend from neutral to down. Neutral meaning cash, down meaning shorting the market, or a combination of the two. It certainly looks like, or at least the talk is, technically and otherwise, that we're going to at some point see 1250 on the S&P cash. So we'll see. But if we had to pick a target for now on the downside where there should be some short covering or some buying or some type of bounce, would be right around 1250. Again, the overall trend, even if it stopped at today's lows and started to head up, meaning not going to 1250, the overall trend would be down basically until we got above 1310, 1320 at this point. Most confirmation, the best confirmation, is if we got all the way back up above these highs that we put in on the 31st, which was a week ago Tuesday, essentially at around 1340, 1345 in that area. So the trend is down. Let's take a look at a daily chart, actually a weekly chart of the SPY. Let's do that. This was a daily chart of the S&P cash that we put up. Let's take a look at this on a weekly basis. This will show the number of weeks down here. This was a post that went out to the managed accounts yesterday. We're looking for a bounce, but the overall trend to play it now is to the downside, so you should be heavier in shorts than longs or in cash. But I also believe, and I've been saying this for the longest time, that we will see 1200 at some point, I believe, in 2011 in the S&P, or 120 in the SPY for that matter. But that is, if we look at this on a weekly chart where the candles are weeks, that certainly looks like decent support. And that goes back, a number of years as well. Once was resistance, then support, then resistance, now support again. So for me, the short-term target is around 125 on the SPY or 1250 on the S&P. But the eventual target where there's really good support, that's not saying it's going to hold for any long period of time, would be 120 or 1200 on the S&P. Now, like we said last week, very similar to last summer, we could stop falling. We could take off and break out through the fall and finish the year much higher. That's a possibility. If that happens, we will get long. But for now, our lines in the sand would be support at 1250. You should be shorter in cash at this time, even though a bounce is overdue because we're oversold. But then long, if you had to pick a number, would be right around this 134 or 1340 on the S&P. All right. Here is kind of what we're doing without giving the store away in our short positions. When we have the 4-minute trader, we're either 100% long or 100% short. Those individuals that do not want to go 100% short can go to cash if they're uncomfortable shorting the market. In the managed accounts, there's a little bit more hedging and so on. So today, prior to the close, we tightened up the stop on a percentage of our short position on the SH. So we have tightened the stop up just under the 42.35 level on a portion of our position in the SPY. We will be moving this stop up with the nice close that we had today. Again, this is short the S&P 500. It's an inverse ETF. Was up 1.38% today. The fact that we got above this candle, which was the high we put in on Wednesday, is a nice pattern. I do believe that we will go to this level on the short position at some point. We will probably come down and test this area of support as well. So think of this as the upside down of the S&P 500, and that's why this 1250 is essentially this area on the SH right here. Okay, so that's the reason for our target on that. We also have a position in the managed accounts we've had for at least a week or so in the DXD. I think we initially picked this up right in this area here when it got above the 50-day moving average. We have tightened up our stops on this as well. That's not to say that we won't re-enter, but going into this weekend short was a good idea But to stay as short as we are at this time, I don't see that prudent, as seeing how we're down 6 weeks in a row on the S&P, the NAS, Russell, and the Dow. So we're just going to tighten up some of that short position a little bit. But again, the overall trend is down. As far as gold goes, the individuals that we have long in my managed accounts in GLD, we hedged a little bit of that, about 80-90% of that on Wednesday. Okay, Wednesday. I will remove that hedge if we get above the high that we have put in place yesterday, Thursday. In other words, if we start to come down here in gold, the overall trend is not broken. But at the same time, we don't want to write it back down to the 144 level without some type of hedge. Bonds are doing well other than junk. J&K is the corporate bond ETF. We eliminated this in the managed accounts right around in here. I know it was above 40-20 in that area. So this continues to go down. The LQD, which is the corporate bond ETF, looks decent on a daily chart, but I would definitely want to make sure that we hold this area of support here, pretty much the lows that we put in last week on Monday the 6th. All right, don't want to definitely take it under 110 on the corporate bonds. We do not have a position in this at that time. As far as the dollar goes, there is a gap here that it did not fill in its entirety. It does not always have to fill a gap. But if you were playing the dollar long here, I would definitely put your stop under the low that we put in on Tuesday the 7th, this past Tuesday the 7th. For our purposes, we are more short than we are long. We have been that way, other than the little head fake that we got about a week and a half ago. We do not have a position right now in crude. If we take a look at crude, we haven't had a position in this in well over a month. There's an OIH chart there, closed below the 50-day moving average back here. Let's take a look at USO. We've been out of this. We sold this, I believe. Let's move this over here. We sold this back on 5/4, which would be right here. So we sold it this day here, which so far turned out to be a good move. But anyway, we want to stay out of crude at this time. And the only thing that we have in gold, we're hedging, and we are also out of silver at this time. So basically a lot of cash, which is a good place to be. I've said this a couple weeks in a row. I think we're going to get a bounce here, but the overall trend right now is down. So sitting in cash or more short than long is a good place to be. All right, you guys, thanks for listening. As always, we'll see you on the blog. We'll see you on the radio show. Doug McKay, antiwallstreetguy.com for the 10th of June, 2011. We'll see you next week.